Hey, Bulls, how we doing? I hope everybody's doing well out there. It is the Sherpa on a Sunday, the 14th of August, 3/4 of the way through the year, damn near. Who would have thought? Had a couple bad weeks in a row. We're ready to turn that around. Football season starting. It's quarterback mentality. It's short memory. We're going to put one of our stocks on the do not trade list, kind of like the do not fly list. And none of those trades are going to fly with me, so to speak. So let's get straight to the Sunday game plan. Remember, you can always subscribe to all of my content and get my trades and get the game plans and get everything else at thesherpa.substack.com. And we're going to get right to it, Bulls. We're going to keep it simple, Bulls. And what we're going to do is make money this week off of what brought us here. So we're going to dance with who bring you, as they say. So, Bulls, real simple. FAS heavy. That's the financial sectors. JPM, JP Morgan Chase, JP Morgan now. The largest and most kind of like the biggest swinging you-know-what on the market in the financial services industry. I want you to have your eye on the target this week and two best bets. Also, make a short on AMC. This isn't to stoke the fire with all the bag holders, wannabes out there. The truth is that company doesn't make money. It has a lot of good financial backing, particularly on its balance sheet right now because of all the stock that the insider sold at the top during the meme madness. They took the money out of the private investor, novice investor, and put it in the institutional investors' hands. They're going to redeploy that money. But straight up, would you rather own a semiconductor right now? Yes. Would you rather own an oil company right now? Yes. Would you rather own a bank right now? Yes. I would rather own a defensive sector right now. I'd rather own a commodity. Fuck, I'd probably like a crypto right now. So just straight up, we're going to short the hell out of AMC, and I got all fired up. But right on, guys, right here. Y'all know me. Y'all know my style. And y'all know I'm a big golfer. But I missed the mark the last 2 weeks. Don't lose your faith in me. Sometimes even a good golfer, sometimes I'll be about to turn in a 75 or an 80 on the scorecard, probably more like an 80 on the scorecard. And I'll go up to a par 3 with a 9-iron, 150 yards, and I'll just top it into the water. That's what I did here, guys. I fucked up. Won't happen again. And we're going to just stop doing all this extra snazzy trading stuff. We're going to stop taking off, calendar straddles and bullish call spreads. And we're just going to hit the ball in the center of the club face. So I just wanted to tell you all that. And I mean that earnestly. We're going to keep it simple. And hopefully I'll film on that. I did lose quite a few subscribers, so it's time to win y'all back. But I chose this business. I chose to do it like this, and I chose for you to only pay for performance. So I'm still motivated. I'm still here to help you capture upside gain. And I'm willing to inherit the task of losing subscribers if I lose them money. That's how it should fucking be. Tell that to your Fidelity guy. Consumer price index. So what happened this week? In the news, I was super bearish. That was the wrong way to be. We had nothing but bullish news. We had... And it's weird to say that news of a consumer price index, the CPI, the inflation number on a year after year basis coming in at 8.7 instead of 9.1 is a good thing. But what it's showing us is that it's a leading indicator on what's happening as far as inflation slowing down. It's still the CPI. It still takes into account things like museum tickets and only a couple of consumer items and not the price of barrel of oil, but does the price of gasoline, but not electric bills, but does, silly items like underwear. Men's socks is actually in there. So my point here is that I have to be dumb. I have to be hip to be square. I have to be dumb money this week. I have to be dumb money a little bit longer because we're bouncing on that knife edge and we're going where the Fed is hurting us. And the Fed is actually hurting us in a direction that says that things are going to be okay going forward and that 8.5% inflation numbers coming in for the next couple quarters it'll be a quarter next time will be a good thing. So we're just going to roll with that. Inflation cooling, market fears residing, it appears so. And that's why we're going to keep it simple. So that was from the StockTwits newsletter. They call the Daily Rip. This is actually from just Yahoo Finance. Now this is Market Watch. Inflation cools, bullish Tesla move, bullish discussions on really the front page of everything, defensive stocks. So even, not going bonds, not going preferreds, not going convertibles, not going institutional, not going private equity. But hey, even you old farts out there that still want to be investing, go ahead and buy a defensive stock. That's what they're telling us. That this tone here in the news is essentially bullish swing away. And I have going to have to change to that and adapt to that. So I'm doing it. If you look at Yahoo Finance, it's the same thing. Confusion is better than being wrong. Unsettling facts about the market. Cannabis. We're talking about weed again. That means it's bullish in the market. Retail sales. And then just the green numbers across the board. To me, again, that's still swing away. That's kind of the put on your batting gloves and step in there kind of mentality. So long as the play, do it in good stocks. Do it in stocks that are undervalued and do it in the right sectors, will you? That's for me, guys. That's not for y'all. That's for me telling myself, don't fucking make this too complicated. The pro tip mean that you're going to see in every single team meeting for the rest of your life. Keep it simple, stupid. It's true this week. It's corny. It's cheesy chase, but it's true. When we look at the sectors, let's just make this simple. Energy is outperformed. Utilities next. Healthcare, which is a defensive sector, is actually up over the last 6 months. IT is down, and financials is way down. And remember, what is the typical economic play when interest rates go up? It's that banks actually do well. That's not showing up here. When we look at the 1 year performance, energy is up 61%. Financials are down, and you can't see it because of stupid. I didn't cut this very well, but financials are down on the year to date. I believe that financials is going to move up and revert to the mean, particularly JPM, the guy that invented the Fed, right? And also just let the horses run in energies and in energy, that is. And also this IT, I got an IT name. Y'all already know what it is. And then remember, another stupid, cheesy meme, a dumb meme, a Dwight Schrute for people with bad senses of humor that think that The Office is a good comedy, right? Just kidding, guys. But we got to keep it simple. I'm trying to keep it light. And part of the keep it simple here is just the strategy is just straight up this. Buy the following ETFs and stocks on down days this week and expect to hold for a 7 to 10% return over the next 10 to 20 days, and we'll clip. I need to start seeing some green on my screen, and I need to do it with more confidence than I have been doing the last 2 weeks, but the same confidence that I have been doing, the 8 months before that. So if y'all want to roll with the Sherpa, if y'all want to roll with me, again, what sector outperforms in rising interest rates? What does the economics book say? It says financials. This is the 3-time levered, so I don't think a 10% return on this is even remotely questionable. I think it's going to happen this week, particularly if we can hopefully catch some of this red on a Monday. But I'm going to buy this on Monday for sure. FAS, the tried and true. Remember when we were talking about this at 69.70? It's back up, and now it's even. And at the time there were better things to buy. Now there's not. So just straight up FAS. I've made my point. Second one, what sector outperforms with political tension, mass media, inflation pushing improved numbers? We're going to edit this in real time, and really just kind of telling us that, hey, this isn't the end of the world. I sold you all the end of the world last week. Now I'm going to sell you the life rafts. So we're going to buy the life rafts. We're going to buy ERX. ERX, I've seen this all the way up in the 80s. There you go. This was the weakening dollar, meaning strengthening dollar, weakening commodity price. Weakening commodity price meaning lower oil prices, meaning that we need to stop buying energy companies, but we're still looking at $90 to $100 barrels of oil in the middle of all this political turmoil and just straight up war going on across the world. And we're getting the vol that we need on the way up. We've had 1, 2, 3, 4, 5 up days. So 7 up days and 5 trading days directly up. I know this ETF like the back of my hand. So do y'all, as much as we've been trading this. Go look back at my Substack and you'll see probably ERX in almost all the posts. This is going to run this week too. And so there we go, right? We're keeping it simple. We're going to do a quick teach back. We're going to buy the triple FAS on the financial sector. We're going to buy the triple ERX on the energy sector. And we are going to buy JP Morgan Chase, the individual stock. I'm putting this in an IRA account. Look at what happened over the last 6 months. Isn't that wild? 20% decline in the last 6 months for one of the biggest and most, in my opinion, resistant banks. This is a value that we won't see for a long time, even if the market sells off hard, even if we have a bit more of a real estate crisis. JPM is going to be making money because they're issuing debt at higher rates. Straight up, that's the way it works. They also have a lot of liquidity for large financial institutions. They're also a private investment bank. They also have Mr. Jamie Dimon, who is kind of has basically a direct phone line to the Fed anytime he wants, and he's boys with Jay Powell. So, I mean, buy this in your IRAs if you haven't already. If you have anything other than some of the stocks that I own, like LAC, XOM, EOG, DVN, CPE, in your IRAs, go ahead and sell one of those and buy this. If you have those, hold on to them. My point here is just fucking unload the wagon, beg, borrow, and steal for some JPM. And then y'all know this one's kind of a fun one. I said keep your eye on the target. I'm sure y'all got the pawn. Y'all know that I'm actually not even remotely subtle with those things. So I don't trade around earnings often, but I really like target for a swing trade. I'm hoping they miss out on earnings. But remember, Walmart recently beat. If you go to a target, just go to a target. Take the Peter Lynch approach. Look around. I was around downtown Austin a lot this weekend, and I saw a bunch of small target, like market pop-ups I've never seen before. Macro, mega, Peter Lynch trade here. This is a great IRA hold. This is a great long-term hold. This is an absolute easy swing trade. Again, hopefully they miss earnings and we can pick it up, let's say Tuesday, Wednesday at a cheaper price. But, you know, I'm telling the parents, I'm telling the grandparents, I'm telling the friends of the family that are kind of wuss traders, wimpy traders, think of another word there, then this isn't even a trade. This is just an investment. So if you're more on that risk averse side, and then look at the chart. I mean, we had 250 back in May, and the fear of economic recession has brought that down to 150, and then back up to 175, and numbers are improving, and the producer price index is declining, meaning that people are spending more money, and the CPI is down, and shipping has been resolved in a way. A little bit of the shipping madness and kind of global logistics issues are declining. Remember, back when we were having those, we had no problem with it at 250. Why the fuck not at 175, right? And then finally, you know, best bets here. Best bet, AMD. I'm in Austin. Boy, I live here in Austin. I work in the tech field in sales. And I know this company since my dad used to sell to them 25 years ago, and going with him on Take Your Kid to Work Day. That's the personal connection. I also just watch this every single day and have been for the last 20 years. AMD at 100. This is kind of that round number philosophy, right? Once we get to round numbers and there's some inertia behind our back, the 100s, the 25s, the 125s, the 150s, the 500s, the 1000s. Something happens emotionally in people's minds, subconsciously in people's minds, and then emotionally in people's hearts. It says $100. That's a cool C note. They take it out of the wallet. They buy it on their brokerage. They like the price. They also set their limits usually at the 120s or the 130s or the 140s, the 150s. So you're going to have more stationary liquidity inside of these. That's part of it. The other part of it is kind of what I was mentioning earlier, is how much I know this. And then they really do have an absolute advantage over Intel right now in their server racks, in their switches, their fuel efficiency, their energy efficiency, I should say, that makes them more attractive to institutional investors if they can get that LED certified server thing going on. So straight up AMD, real easy. Like I said, I'm not buying any options on anything this week other than I will throw a call, and this is a longer term. So this is going out 2 months, 68 days. But I'll buy a $100 call at that round number, and it looks like that thing is going to cost $8. So for me to be $8 grand for 10 of them. No, I'm sorry, $8 grand for 100 of them. $8 grand for 10 of them. So I'm liking that. I didn't really show the chart very well, but I'm liking that. That's the best bet on the long side. The best bet on the short side is what I was talking about earlier. I love talking shit about meme stocks. I love talking shit about investors investing with their hearts rather sheepishly, and following people with no credence or reason to follow. You got me. I'm the best there is. Been doing this for 15 years. I've been honest with my subscribers. I walked away from a incredibly lucrative career so that I could tell you the truth, show you my personality, show you how I am, and show you how to trade. And I'm doing that. And the people that are buying this are following a bunch of bozos on message boards. And it's really kind of like they're basically simping for all these stocks out there that are considered meme stocks. And AMC, we had Top Gun, the most profitable movie ever, showing in AMC theaters. We had the resurgence back to movie theaters. We had the incredible outperformance of yet last year, the meme stocks. We've had the sell-off that happened in May to now in the market. We have stabilization. But why do we have a stock going from 10 to 24 in a month in the worst time in the market for this year, and really in the last at one point it was since 1987, right? The worst June since 1987. And we have AMC coming back 150%. This is dumb money. This is stupid money. This is money that I want you to bet against. This is money that I'm going to bet against. And just beware, buyer beware. This is a short-term and very, very risky trade. But if I can catch an up day, particularly on Monday or Tuesday, if I can see one of these raucous, stupid 10% or 20% up days in AMC, you better believe I'm going to wipe all the trades that I mentioned from earlier this week. And I'm just going to buy as many puts as I possibly can at $25 for $4.50. And I'm only going to go out 2.5 weeks. So this is a 19-day trade. It's really only got a week and a half, 2 weeks to shine. And that's a September 2 of 22. So anyway, Bulls, we're back on the horse. We're back on the quarterback short mentality, short memory. Thank you for riding with me. Thank you for staying with me. Remember, this is not child's play. You can lose money in doing this. If you're scared, get a dog, as some of my old bulls would say. And remember that you have me. Be sure to subscribe to the paid Substack for the timing of my trades directly to your email. For any assistance with any trading questions via call or text, anytime, ask any one of my paid subscribers if I've ever not gotten back to them, and if it's ever even been more than 15 minutes. I'm walking out of yoga class for this shit. $20 a month, $200 a year. You get this. It looks like this. It goes directly to your inbox. And AFG, LFG, LGR, let's get rich.